Welcome everyone. Thank you for your attendance here today. My name is Damian Russell. I am one of 4 co-founders of Growth Centers International LLC, GCI. GCI is the sponsor co or management co for the GCI Asset Fund, a real estate development fund developing and managing highly technical real estate assets tailored for the cannabis industry. We are presently seeding the sponsor entity, which is why we are all gathered here today. This raise is $978,000 in a Regulation D private placement under SEC Rule 506C. Accredited investors, we are seeking your participation, your investment today. The GCI offering provides a robust 12% targeted IRR, a very investor-friendly waterfall distribution, and a guaranteed pathway to participation in the subsequent $60 million equity raise for the GCI Asset Fund itself. Easy and immediate entry, favorable waterfall, and the very essence of impact investing. On the periphery of the most emerging space in recent history, this is GCI. We promise to be respectful of your time and will be brief here today. Without any further ado, I give you my partner, GCI co-founder, David Smith.
Thank you, Damian. Quite an introduction. As Damian mentioned, my name is David Smith, and I am one of the co-founders, one of 4 co-founders of Growth Centers International. Our objective today is to provide you a little more insight into some of the details of our investment vehicle. As Damian mentioned, our objective is to raise $978,000. That will entitle this entire project and then facilitate a subsequent round of $50 million where we can go vertical and build the construction. That being said, you will see here that a lot of parallels can be drawn between what we're doing and also the data center environment. It is pretty much the same model. However, there's a little bit of a nuance in which we are facilitating the utilization of infrastructure by cannabis cultivators. To give you just a brief history, this whole concept started while me personally, I was in the data center space. Damian was and still is in the real estate space, and we had another partner, Abraham Fraley, who was in the facilities management and maintenance space. This all started from a conversation at a birthday party about 3 years ago. From there, we all saw our collective strengths in being able to pull something like this off, and we decided to form a company and take a look at where we can develop our first real estate project. California was top of mind. We are located in California, a very cannabis-friendly state. We just saw some things with California where we felt that combined with some of the impending federal legislation, which continues to gain momentum today, there may be an opportunity to locate outside of California and still serve some of these major populous centers. Then 2020, we all experienced COVID, loss, and we were almost forced in a position in which we had to go execute this. That really becomes a red flag to state that you have to have some sort of recession-proof investment when you start talking about financial planning. And we'll get into a little bit more of that later. And here we are today, where we actually have a formal investment vehicle, which is a private placement memorandum, which Damian had mentioned. We are ready to accept capital from investors today in a formal fashion. So at GCI, we are a real estate development company. We are affiliated with cannabis, but our primary focus is real estate development. Cannabis cultivators are our tenants. So in a building like this, which you see here, let's say it's 300,000 square feet, we will outfit that with high-tech amenities specifically designed for cannabis cultivators. We'll also have redundant infrastructure, security throughout the entire campus, into the building and throughout the building to each individual grow suite. So when I say grow suite, if you take a look at this facility and you divide that amongst 10 to 20 cultivators with suite sizes ranging anywhere from 5,000 to 20,000 square feet, which are entirely modular, then you'll be able to conceptualize the infrastructure that we're putting in place within each individual grow suite to enable small to mid-sized cultivators to take advantage of very high-tech and advanced infrastructure without a large capital expenditure. And as we say time and time again, we are the picks and axes of this new gold rush. We aren't necessarily the cannabis cultivators or the gold miners, but our infrastructure serves as those picks and axes. One of the reasons why there will be a tremendous amount of value to our tenants is because we are de-risking their supply chain. We are mitigating risk. When you start talking about things like redundancy, combating climate change, which can and extreme weather events, which wipes out crops, regulatory compliance, and even profitability. If we're providing this infrastructure in an OpEx model versus a CapEx model, all of a sudden, small to mid-sized cultivators who don't necessarily have these huge checkbooks, they can have access to that infrastructure without a huge outlay of capital. Now, all of a sudden, their balance sheet looks better, they're getting better terms on their money, and it turns into more profit. Very, very critical from our standpoint, because our mission is to allow these small to mid-sized cultivators to compete on a level playing field with some of the large enterprises. You start talking about big ag, big tobacco, other industry titans who are really getting into this space. We still want to make sure that that craft cultivator, that small craft individual, small to mid-sized cultivator can still compete. And when we start talking about metrics such as social equity, this is really where social equity comes into play. You have to be competitive against these large titans in order to maintain some degree of social equity. Some of the specific amenities that we're talking about in this building, as you can see here, environmental controls. So whenever you're talking about growing a specific strain or genome that needs a requisite humidity level or temperature or lighting cycle, et cetera, you can control that entirely. Biometric security, which includes retinal scans, fingerprints, that type of thing. Also badge access, power resources, facility of this size. You have to have adequate power, not only for today, but future growth. We are working with the utility company to provide an on-site substation. Redundant infrastructure, we talked about backup generators, HVAC systems and mechanical systems, IT systems, everything. Protection from the outdoor environments we spoke about, and getting a little more into some of that jurisdictional compliance. When a cultivator wants to pull a permit, they're going to be asked certain things. Okay, they're going to be asked for compliance with environmental air quality, security, zoning. We've taken care of all that, so we can basically hand them a plan that they can take directly to that permitting office to facilitate that approval. We've all heard all the figures about the total addressable market for cannabis. Per 2020, $1 billion, that's probably light. Now we just continue to see growing momentum. Our service addressable market is actually Michigan. We will, in a later slide, tell you why we chose Michigan, but the long and short of it is that the power is less expensive. The real estate is a lot less expensive compared to a place like California. It's also got some strategic geographical advantages itself, just by nature of where it's located. But with this market in Michigan expected to reach about $3 billion, probably plus within the next 5 years, we feel this is a tremendous opportunity for us. Again, getting more into Michigan, you can see the trending here. Medical and adult use is permitted, as is natural. Once the adult use or the recreational permit happens, you see here sometime around June of 2020, that's where you get that inflection point. The industry still continues to thrive, but less people want to renew their medical cards, and they can just go in and buy it recreationally. Furthermore, as far as Michigan is concerned, they've got a very, very, very favorable environment, and they are a very cannabis-friendly state. They are looking to attract cannabis industry participants and really any industrial development that comes to that state. Getting into some more detail in terms of the impact of federal decriminalization, once that happens, again, now you're talking about being able to grow in a state such as a Michigan and then transport throughout the entire Midwest. Furthermore, as international borders open up, now it's right across a bridge from Canada, and it's a very easy access to that market. Now, we have been talking a lot about cannabis, and cannabis is our primary focus. But remember, we are a real estate development company. We put systems, measures in place to facilitate the indoor agricultural growth of cannabis. However, this model is applicable to far more than cannabis. It can be applicable to berries, it can be applicable to herbs, to saffron, you name it. If there's ever any sort of decline within the cannabis space, we are able to easily pivot to service that indoor ag market. You can see some of the figures here in terms of compound annual growth rate, and there's a lot of momentum because it is a very environmentally friendly practice. And when you start talking about supporting local and buying local, which is trending year over year, this facilitates that. Getting back to some of our value proposition to our cultivators or our tenants, our purpose is to provide a white glove service, okay? Any developer can provide a large warehouse, triple net lease, hand a tenant the keys and say rent's due on the first of the month. Where we're going to compete is in our service. You'll see the service through a couple of different ways, including our partner ecosystem, how we can affect top line revenue of our tenants, how we can provide resources for compliance. We already spoke a little bit about that, how they can open up new markets, consultation, learning centers, career development, training, et cetera. If we do that, then all of a sudden, we're able to take maybe an initial lease term of 3 to 5 years and 5-year options, and now you have what's called a lifetime value of that account that starts spanning 10 and 15 years of revenue. Very important for us. We had talked about a lot of this before. Some of the value in terms of a sales model is being able to provide all of this infrastructure under a consolidated fee. We can also structure creative lease terms. So as there's harvest cycles that are considered, we need to have a service offering that fits within our model. We talked about some of the white glove services. In addition to that, as you develop this kind of ecosystem right there on a particular campus, now you've got R&D capabilities that are there, testing capabilities that are there. You have legal, accounting resources, branding resources, okay? These are all attributes that we feel will be of tremendous value to our tenants. We started talking about the biometrics and the security, that's really the basics there. Some of the other things that we have that are going to continue to make sure that our cannabis cultivators span that 15-year lifetime account value. As far as competitors are concerned, we touched on this a little earlier. There are entities which are providing large, really empty warehouse conversions, but they've mostly been for single occupant operators. Our model of carving up or dividing up that large warehouse space into grow suites and building infrastructure directly to that grow suite so it's plug and play is unchallenged. Nobody is doing this right now. We feel that our experience and our understanding of the systems that are required by individual cannabis operators is going to play a key role in that. You can see some of the competitors down there. And again, like I said, it's going to come down to service. It's like anything else. You can copy the mousetrap, but what are you actually doing for the customer? And that's where we feel our strength lies. To delve a little further into that, regarding our partner ecosystem that makes this a real estate platform as opposed to just a real estate building, let's take a look at Ease. They are the largest distributor of cannabis in the United States. They've got a momentum program which provides training, grants, and other types of resources to small to mid-sized cultivators. They also have a white label program. We are affiliated with them. We have board members that are from EASE that are associated with Growth Centers International. Growth Centers International is also tied into some of the other advisory boards within EASE. So here we have the capability to direct the cultivator who may be struggling with revenue, and we can point them in the direction, make an introduction, and all of a sudden their profitability goes up, they're a lifetime customer. Detroit Regional Partnership, they are an entity that ensures compliance for these small to mid-sized cultivators. So anything regarding compliance and permitting, that's where Detroit Regional Partnership comes in. Consumers Energy, we touched on that. That's a utility company. They are providing an on-site substation and a very favorable 30-year rate structure. So now not only do we have the adequate power infrastructure, but we're controlling rates as well. The next three, Albert Kahn, Chrisman Constructors, and PMA Consultants, those are our design and development partners. Between them, they've got about 300 years of collective experience building the most advanced systems with hospitals, biotech, even some space endeavors and other things. They built everything that you can imagine. So when we start talking about systems and innovation and things of that nature from an infrastructure perspective, they will be critical. Finally, Flint and Genesee Group. Whenever you're doing something like this and bringing a project to a community, the community wants to know how it's going to impact that community. So we start talking about quote unquote impact investing, which is a buzzword now, and social equity. From the Flint and Genesee Group, they help us define and meet those metrics which are going to be beneficial to the community. So what are we doing about jobs, job training, career development, sponsoring entrepreneurs, that type of thing? This is where Flint Genesee Group really comes in to help us provide that measurable impact to that community, and therefore makes for a lot easier path to entitlement when we're proposing this type of thing. So we've got 4 core members. We've also got an advisory board of 4 as well, and we've also got Michigan advisory board of 2 additional members. I'm not going to go through the entire bios here, but you can see some of the experience. Again, with Damien, a 30-year veteran of the real estate industry, affiliated with Berkshire Hathaway Home Services. He's done commercial real estate, finance, development, etc. Abraham Fraley, again, I mentioned more than 20 years of experience, property and construction management, emergency preparedness for Fortune 50 companies here in Northern California. Me, myself, 22-year serial entrepreneur. I love the spreadsheets, market development, tech, renewable energy, and infrastructure. And Weston Fraley, that's our electrician. So when we start talking about developing large industrial, commercial electrical systems, that's where Mr. Weston Fraley comes in. He's done that. You can see the stats here, over 750 kW systems. He's going to be the one to ensure that everybody gets power to grow their plant. As far as the advisory board members, we've got a couple of different people that we feel are very complementary in terms of their skill sets. You've got David Chinsky, 30-year proven industry experience of community development and municipal engineering. He basically developed all the Stanford University athletic facilities. He's not only developed their master plan, but he's also facilitated the construction and capital planning of all real estate that's happening associated with Stanford Athletics. Marlena Schultz, an attorney currently Clean Energy Council in San Francisco. Before that, she was with Cooley LLP. She specialized in developing these types of investment vehicles, which are private placement memorandums, extremely technical, and a lot of legal disclosure. Sydney Snow, she is senior manager of government and community affairs at EASE, been a tremendous resource. She has really helped us understand the landscape of federal decriminalization. She is right there on the ground in Washington, D.C., and she is really the thing that helps us understand where we need to go strategically. And then finally, Mr. Ramon Garcia, when you start talking about cannabis legends, especially here in Northern California, He is up there with the likes of, if anybody is familiar, Cookies Burner, that type of thing. He's been doing it for 30 years, not only as a grower, but also an advocate of the industry and also a very vocal proponent of social equity, impact, change investing. And finally, on the ground in Michigan, we've got Ed Merriman. He's a principal at a company called Transcend Digital Growth Ventures. So when we start talking about cannabis and things such as blockchain and QR coding and some of these other technical aspects of it, Mr. Merriman comes from a company called Slalom Consulting, a very huge IT consulting tech firm. And now he moved into the cannabis space, so he's well positioned to help us in that regard. And then Ken Spencer, he is the VP of Business Development for that Detroit Regional Partnership, which we mentioned. And he's the guy who makes sure that we understand the sentiment of the industry and the local community there. As Damien has mentioned, we are looking for about $978,000 as a sponsor entity. So let me just explain that in a little more detail. With any real estate development, you're going to have pretty much two to three phases. I guess the first phase is really setting this up, which we've already passed. We've already set up an entity who will actually start entitling this project. That's where these quote unquote pre-development comes in. When we start talking about entitlements, we're talking about things such as site control, things such as studies, impact studies, planning commission review, and approval by the planning board. Once you get to that stage and get to that point in development, GCI will actually then sell the project to a fund entity or to another entity, which will typically be an LLC or an LP, whose primary purpose is to take over that entitled project, pull building permits, go vertical, lease out, manage, maintain, and own that project for the duration. At that time, GCI will take its capital from that transaction, and then that will start the next project that they'll entitle. When we start taking a look at some of the possible next projects, we're looking at things such as another site in Michigan. We've got Nevada on the horizon. We've also got Virginia. We've got upstate New York, Oklahoma. So the idea is to really cookie cutter this and set this up so that you continue to proliferate different projects which different LLCs and LPs will own. So what's the value to you as an investor? If you take a look at the history of the stock market, which is where a lot of people have some of their retirement planning, you can see the volatility associated with that and some of the recessionary and depression events that have happened throughout history due to things such as wars, such as geopolitical events, stock market crashes, pandemics, etc. The idea is we want to take something such as cannabis and provide a recession proof for your investment portfolio, or recession proofing for your investment portfolio. So you see some of the categories here, which a lot of these are very intuitive in terms of consumer staples and healthcare and essential services, et cetera. Marijuana has actually been deemed an essential service. So state regulators have maintained that since marijuana is an essential service during this last pandemic, dispensaries and the supply chain for marijuana companies remained open. So when we talk about GCI and what our value is to an investor, it's multifaceted. From the standpoint of a return and a hedge against stock market crashes, this is it. Furthermore, with some of the other elements that we talked about with our secondary markets and the ability to pivot to indoor ag, if that ever happens, now we're participating in consumer staples. We've already talked about the real estate, the information technology, and the energy and the utilities that we're providing for these cultivators as well. So regardless whether it comes from marijuana or the consumer staples in terms of food and indoor growing, we've got a tremendous hedge and a fundamental pragmatic approach to these industries because it's based in real estate. Some of the other things that we're seeing and we're witnessing, as everybody is that people are really demanding a lot more from their investment, and they want to put their investment capital to work, not just for a return, but also some sort of measurable impact. And we all hear impact investing. And here are some of the reasons that people would want to invest in GCI and some of the solutions that we provide for that impact investing. So when we talk about social equity, we all know that there is a failed war on drugs. The war on drugs has devastated communities, really impacted generations of folks in a negative way. So by developing entrepreneurs from these impacted communities who don't necessarily have to come up with $1 million just to enter into the game, we are providing measurable impact. We also talked about the resources that we have through our partner ecosystem to ensure their success. So now we're looking at a tenant as a lifetime partner, ensuring their success with every resource that we have. Again, some of the other things, renewable energy, water conservation through innovation with this indoor environment. We also have industry partners who can help us with precise irrigation technology, with racking, with effective and efficient lighting, et cetera. And again, it's all indoor agriculture. So whether it's with cannabis or strawberries, it can be ported to either industry. Investing locally, that's always going to be a theme. We all, everybody knows the big brands, but everybody's got an affinity to supporting that local brand. And by having these grow centers throughout the regions and the different parts of the country, now investors are able to say, hey, I want to invest locally. When we start talking about Michigan and the greater Detroit and Flint, Michigan area, a lot of celebrities, a lot of athletes, a lot of attention is being thrown at how can we help this particular community? And we feel that we're the perfect vehicle for doing so. Now, the other thing we're doing is we're really trying to eradicate that negative stigma of cannabis. We're trying to elevate the perception of cannabis into this new level. Right. So a lot of times we'll think of cannabis and indoor growing as kind of just a non-standard real estate space or space that's either leased or constructed without continuity. We're providing a new standard for facilities. Not only are we providing all the things we mentioned with redundant infrastructure, security, the tech amenities, et cetera, but we are going to start moving to things such as certifications, standards. It's going to come at some point. You start applying measures like ISO and things of that nature. We feel that we're in a perfect position to standardize some of these systems and amenities. So now you can start talking compliance. Now it's a lot more insurable. There are a whole host of things that come to the industry as a result of this. And again, community development, we talked about that, but what I would like to say is that even if within a community where we bring our development, there are participants who have no interest in cultivating marijuana, we have opportunities for them to understand and get trained in career development guidance for things such as design, engineering. We talked about some brand marketing, medical research, a lot of energy going into that. And then all of this, you can start running on a platform associated with data modeling, AI, and that type of thing. To provide a little more detail, our private placement memorandum is registered under Rule 506C under SEC Code Regulation D. Again, this is for startup and pre-development capital via GCI. So that $978,856,000 isn't going to vertical construction. It's going to entitlement all the way through acceptance by the planning board. The minimum investment for a participant is $10,000 or 10,000 units. We do have a full prospectus, subscription agreement, and operating agreement that you can download from our website, www.gciassetfund.com. And you can also contact us at invest@gciassetfund.com. So with that said, I'm going to turn it back over to Damien Hopefully, we provided a lot more context into the nuances of Growth Centers International and also some of the value proposition for our forecasted growth. So with that, Damien, I'll let you close it out.
Thank you, David. Thank you. That was a brilliant presentation, really detailing everything I think that we have to offer, and I think it's quite an offering. Again, as we started out or said in the outset, this is an offering that's available now. We're seeking investment partners, limited partners, due to the nature of the Regulation D 506C stature. We must limit the opportunity to accredited investors and qualified entities. So that being said, please give us a chance to talk to you directly if you're inclined to make a true impactful investment in, as I say, the most emerging space to come along in recent history. The email address is invest@gciassetfund.com. And again, that is invest@gciassetfund.com. The website is gciassetfund.com. Please visit the site and register for your subscription today. Again, my name is Damian Russell. Our presenter today was David Smith. We are 2 of 4 co-founders of Growth Centers International, and we wish you a good day.